Hello, everybody. My name is David Scheuer with Stalker Finance, and today we're going to talk about the pros and cons of day trading. All right, so let's go ahead and get right into it here. First off, the pros. So quick gains, possible very large gains. Obviously, if you manage to ride a pump up or something like that, you could get a few 100% even or something crazy like that, and that does happen with a lot of these small stocks. Which brings us to our next point here: good for trading low cap stocks. It's also good for small accounts. This is kind of in my opinion, but I do believe that when you have a small account, day trading is not a bad way to go. It's also not a bad way to learn for beginners. If you're just getting into the stock market, you have no clue what to do, and you want to just try something fun, and it's not that big of a deal if you lose some money or something when you're learning. Just go ahead and try day trading for a little bit. You'll really get to know the different types of orders, but there also are some things that you make sure you do as well. Like make sure to do your research on companies and don't just blatantly go and start betting and gambling. That's bad. And we'll talk about that later. Let's get on to the next point here. It's short term. So, obviously these trades are very quick. They're not, long-term investments. You don't have to be stuck in one company for a long time or something like that. It's just very quick things in and out. Boom, bada boom. And yeah, let's get into the cons now. All right. So the cons. Fees. Fees are a huge thing. Every time you buy and sell a stock with a third-party broker, at least, you get a fee. Now, this fee can be $5 to $10. And I know it with Robinhood, that broker, they actually, I think it's free. It's completely free, fee-free. So they're not a bad way to go if you want to day trade. I've heard some mixed opinions on their platform. So if anyone uses them, go ahead and comment below. Tell me what you think of them. I'd love to know. Anyways, next thing here. So it's very high risk. Obviously, if you're day trading and you're making constant trades, you might lose something. There's a chance that you could mess up on something or miss an opportunity, or you could not be paying attention and have it drop way down and lose everything. Whatever. You don't know what's going to happen, and you could, if you're not being careful, you could lose a lot of money there. Next thing here. All right. Yeah, you can miss out on long-term opportunities. So, for example, if you're constantly day trading and, meanwhile, Apple's over here going up 100% for the whole year, you could end the year because of how much you've lost versus how much you've gained. You could only end the year maybe up 20% total. Meanwhile, if you had just stayed in one company, you'd be up 100% or a few hundred or maybe 1,000. I don't know. Who knows with a lot of these companies here. But that is one thing that you could be missing out on. That's kind of like a what if thing there. Anyways, next thing. So pumping and dumping / other scams. Pumping and dumping, especially with penny stocks, is very big down there. Be very careful of it. There are a lot of people who kind of embrace it and almost try to figure out when it's going to happen or which company is going to, or that one company, their stock gets pumped and dumped a lot. So you kind of watch and hope you can ride the pump up and then sell before it's too late. So people do that, and that is a strategy down there with day trading. But anyways, let's get on to the next thing here. Oh, one more thing. Sorry about that. Other scams. So there are plenty of other scams as well, too, with fake companies, people trying to get your money, saying, oh, hey, come buy my stock or whatever. Come give me your money for my fund. I'm a day trader. Who knows? There's lots of scams down there. And a lot of this can be associated with day trading, but not necessarily. This can happen to anyone. Next thing here. You have to wait for your funds to settle. So this is what I mean by this. Basically, after you sell your stock, you then have to wait a few days, usually 3 to 5 business days, depending on your broker or what you're using, and that is called unsettled funds. So these unsettled funds, basically, you can technically buy back into another stock, but if you sell again after that, then you're gonna have huge penalties. You could be banned from trading for a long time. You could have to do only over the phone trading, which obviously that'd kind of suck. And so anyways, that's one kind of bummer about day trading, is that if you waste all your money trading in the first hour of the day, and then you're going to miss a lot of opportunities, or you could, I'm not saying you will, but you could, and you could, you have to wait for your funds to settle. So if you trade one day of the week with all your money, and you just make one trade, and then you can't trade the rest of the week, that could be a bummer. So that's one thing just to watch out for. And obviously, you probably don't want to put all your money into one stock right off the bat at the beginning if you're day trading. And we'll talk more about that later. Anyways, so it's tempting to take cash out. So this is kind of interesting. A lot of people don't touch on this when they're talking about day trading. So when you're day trading, if you're making good money when you are trading, in the few hours of the day, let's say you're making, say you got a pretty big account and you're making $500 on each trade here, and you're, maybe you made 1,000 or whatever, in just an hour, and you're doing really good. Well, anyways, the bad part about this is that it can be really tempting when you see this money coming in to want to take it out of your account. But what happens if you take it out of your account, you can't trade with it. And then you're going to have to start over again. And so if you've ever heard of compound interest, you'll know that if you keep your money in, it's going to keep growing. And then every time you trade with a bigger amount of money, you obviously get a bigger return. So there you go. Now you can also get a bigger loss. But yeah, that would kind of suck. So anyways, that is one thing to just be careful of. You don't want to take all your money out right away, unless you do. But that is one thing that I would just keep in mind. All right, next thing. So now we're going to talk about some more specific things here to wrap this up. So let's go ahead and talk about small accounts. So I talked about this earlier a little bit, but they're a great way to learn the different types of sell/buy orders, as well as the different types of markets, and just all about the stock market in general. It also allows you to be riskier. And what I mean by this, because if you have a small account, and hopefully it's not, all your life savings that you're trading with. You never want to trade or invest with, if you're trading and investing and you lose your money, you don't want to be screwed over. You want to be able to know that, hey, if I lose my money and it all goes away tomorrow or something, I'm going to be okay. I'm going to be fine. And so that's one thing to be careful of. When you're day trading, you don't want to be, day trading or even investing in general with your entire life savings, from when you were born or whatever. Anyways, so that is one thing that you can be, though, is if with a small account, if it's not too much to lose, then you can be very risky, and that can be kind of fun, honestly, being a little risky. But a con, it can lead you to start kind of betting, and I'll talk about this a little bit later in the video, but it can lead you to kind of, if you're being too risky, you can almost seem like you're betting or gambling, and that can be not very good. Anyways, so here, let's talk about a con here. So it can lead you to rely on charts/graphs and not your knowledge/research of the company. So when you invest, whenever I invest personally, I do as much research and as much, get as much knowledge and everything about the company. I read all the numbers, everything before I actually make a buy. Now, sometimes I don't have time for that. Sometimes, you just got to buy really quickly. You just got to get in there because you're going to miss the opportunity if you wait too long. But usually, if I'm going to do that, I've already known about the company for a while and I've been watching them. So anyways, that's one thing. You don't want to fully rely on charts and graphs. They can be very helpful, but you never know when something's going to happen, and a chart and graph doesn't tell you if the company's being sued. So yeah, there you go. Anyways, next thing, low cap stocks. So this is kind of interesting. I talked about this a little bit earlier, and we'll touch on this again here. Low cap stocks are essentially smaller companies. There's more to it than that. I just kind of wanted to, dumb it down a little bit so everyone understood it. But that's basically what they are. Penny stocks, for example, are generally low cap stocks. In fact, they're almost in their own thing. Anyways, so this is good because low cap stocks are very volatile, which is very good for trading. So when a stock is going up and down like crazy, that can be very good for trading because you want to be selling those spikes. You want to be selling the up and down. You want to be shorting it on the way down, buying it and selling it on the way up, obviously. And yeah, that's a good pro, is that they can be very volatile, and it's not, it's not as boring as some other ones, which only go up 0.5% every day or something like that. Anyways, con. High risk, and I talked about this earlier. Pumping and dumping, very common among penny stocks and low cap stocks in general, so be very careful. But yes, it's very high risks. Obviously, I just talked about this, how you don't want to invest your life savings into something or trade your life savings, because if you lose it, then you're going to be screwed. So you want to be able to know that, hey, penny stocks and all that stuff are very high risk, and if I lose everything, then it's okay. But high risk also means a higher gain, so keep that in mind. Anyways. Personal review. This is just my personal thoughts on day trading. Now, I personally am not a very big day trading fan myself, but I know people that do it. I've heard of people that do very well at it, and I know it's been around for a long time. But let's go ahead and talk about this. So my personal review here is right away. I'm just going to say it's a good way to start learning about trading stocks. And I just mentioned this before, and I don't think I need to talk about that anymore. But yeah. That's one of my things there. So next one, should be a side thing. Do not day trade with all your money. Rather make day trading a fun thing on the side. So what I mean by this is, as I said, you don't want to have all your money in one pot. You want to kind of mix it up. So have maybe 50% of your, if you have a pool of money and you want to put it in the market somewhere, don't put all of it into day trading for fun. Put some of it into maybe, an index fund or something, or a mutual fund or whatever. Put some of it into day trading, and then put some of it into maybe a long-term investment, and just make sure that you kind of diversify yourself so that your risk is a lot lower. That said, if you do have a little bit, you do want to have a little bit in day trading, in my opinion, or not just day trading, but just for kind of personal trading, because I think it's kind of fun and you do learn more from that. So another thing here is that I think you should do your research and learn about the companies, even if you're just doing one trade a day. But if you're trading them a lot, and a lot of times what will happen when you're day trading, or not day trading, maybe you're just trading once or twice a week, then you want to be able to go ahead and know the company that you're trading, because a lot of times you are focusing on one company or just a few small cluster of companies that you've gotten to know really well. And so you don't want to just look at the numbers and graphs. You want to learn what these companies are doing, because maybe if you do enough research and stuff, you'll realize that these are a great long-term investment, and you'll end up doing that instead, and you'll make even more money than you would have day trading. Next thing, so learn the charts and graphs, but don't fully rely on them. I mentioned this, and I kind of said this earlier, but graphs and charts are great. There's a lot of things about them that can really help you know when you should, enter into a stock or sell or whatnot. But, personally, I don't think you should ever fully rely on them, and you should always go with, your own research and your own facts and what you think. Because, again, computers and graphs and charts can't tell when the stock's just going to plummet. They don't know that the company's being sued, or they don't know that the CEO is a crook or something like that. And that's something that humans and people only know. So anyways, don't fully rely on graphs and charts, but they're a good thing that you could learn and make sure you know all of them. So when you see something like it, you can say, hey, I know that, and maybe it could be good to buy, or maybe that one means that, or whatever. And next thing, all right, don't let day trading turn into gambling/betting. So I touched on this a little bit earlier in the video, but again, day trading can turn into gambling and betting. If you're just going in for fun and you just start dumping money in and hoping that it goes up, and then you make a bunch, and then you start doing that again, and then you lose everything, that's gambling and betting pretty much. So anyways, just be careful. Make sure if you're going to day trade and stuff, you're actually day trading and you're actually doing it, professionally, and not really professionally, but you're actually doing it, safely, I guess could be a good word. I'm not really a good word. I don't know a good word to describe this, but anyways, don't gamble and bet unless that's what you want to do, but you might as well just go to the casino for that. So anyways, be careful out there. There's a lot of scams. I know there's a lot of pumping and dumping going on and stuff, but again, this is my just personal review of day trading, and yeah, anyways, thanks for watching. Make sure to subscribe and comment below what you think of this review of day trading. If you agree with some of the pros, if you disagree, or if you agree with my cons, or if you disagree, then go ahead and leave a comment below what you think. If you also have some more tips you want to give out to the community, or if you want to say, hey, David, I also have, these are some things that I really like day trading. This is why I think day trading is great and why you should only day trade. And you can tell me that. I respond to everyone. So go ahead and comment that below. Anyways, check out these videos too. These are some great videos. I did one on trading versus investing and what that means. You should really watch that video. It is really great to just learn about what trading and investing are and the differences between those two words and those two different styles. Anyways, peace out.